Hi guys, hope everyone's doing great. S&P 500 Technical Analysis Wednesday, 23rd of June 2022. So to follow on from the theme that we've been discussing in the group since the start of the year and very much on YouTube with Bitcoin, you can't have Bitcoin halving to 10,000 and have S&P going higher. There's nothing bullish going on here. We are in a bear market and we haven't, as of time of doing video, bottomed. As per the thumbnail, I do feel the next round number is going to get taken now eventually. Now, I am open to a short-term little, low here at the end of June, perhaps in July. That's only because we're coming up to 3,500 here on the ES at time of doing video. There's definitely some interesting pivot levels here, right? So I am open to a flag, but this video is more the long-term count, right? We are very clearly in a downtrend as evidenced by these lines. These lines are a bit thick. Let's just get these a little bit thinner right here. That's a bit better. And these lines, well, the angle of these lines are starting to they're starting to increase. That's more 45 degrees. This is more 60 degrees, and now we're going down. I know that is really the sign of an impulsive or a nasty leg down. Why is it so hard to believe that everyone in the US took their $1,200 stimulus checks in April 2020, watched my video here and bought a call option, right? Why is it so hard to believe that we have to reverse right up to the point where all the stimulus checks, that was just in the US. If you include all the stimulus checks of the entire Western world, obviously that was a big part of the melt up that we've had, right? Wave 5s are always the most speculative. Why is it so hard to believe Bitcoin has to and will break 10,000? We have to reset the entire move down, right? The S&P has averaged 20% annualized since 2009. Here we have gone up 100% in 2 years. Effectively, we are mean reverting. I don't think it's beyond comprehension at all for most people to understand that we have to reverse the entire move up to the point where the bulk of these checks went into the stock market. It's not that hard to believe that this market has to go lower. People would have you convinced that this is part of a wave 2 or a wave 4. I'm not seeing that. I don't think it matters. So this I'm not interested in. I'm not going to analyze what's going on here short term. You'll have to join the group for that. We're talking more longer term here. Eventually, when all is said and done, 100% probability we take out the pandemic lows. Sorry, the pre-pandemic highs. Let me take that back. 100% probability we take out the pre-pandemic highs. Now, do we take out the pandemic lows? Well, just like Bitcoin, I don't want to make that call. On Bitcoin, it is still a 10% probability we take out the pandemic lows at 3K. 100% we end up somewhere between 8 to 12K. Then I will reassess. So those who have watched that video, and I recommend anyone who watches any of my S&P videos, please do have a look at the other videos, because I tend to cover a lot of markets all in the same video. It's not necessarily that I'm only covering just what you see here, right? They are both correlated. There's a 99% correlation with Nasdaq and Bitcoin. There's probably somewhere near an 80-85% correlation with S&P and Bitcoin, right? So they all have to go down together. They are all risk assets. To me, I will reassess at 28.50. If we end up doing a bear flag, then I will reassess. There might be one more quick, 20% crash in a week type of thing here. Then we V-bottom, then we go higher. Usually, as price leads sentiment, people get more and more bearish, get short in the hole, then I'm expecting some kind of squeeze. Whether it goes to 2,200, 2,800, 28.50, sorry, it doesn't matter. We're definitely going to go lower. And yeah, sure, there might be a short-term bounce here coming in the next couple of weeks, perhaps up until mid-July. It very much depends on earnings and a few of the things. I don't see this reversing itself. Once again, the angle of this descent is very much classic of something that's quite nasty. I mean, that was around 45 degrees. I'm just guessing there. That's more like 60, right? What is the angle there? 67-degree descent there. Once again, we're approaching the pre-pandemic highs, 9k or 9.5k. Wouldn't be surprised if we get a flag, right? I'm okay to a flag. I'm not interested in calling the flag though. We're talking about when is this actually going to bottom. I won't share the exact target, but put it this way. We're going to end up somewhere in here, right? You'll have to join the group for that. But I don't think any of these markets at time of doing video have bottomed. We still have more downside to go in terms of the y-axis in terms of price and x-axis in terms of time. It shouldn't be that hard to understand or to comprehend. All of this move was artificial liquidity that has now been withdrawn massively, and now we are reversing the entire move. Right, good. We have been calling for 110 on the dollar. I don't really see this changing. We have various reasons for that. Sure, there might be a short-term, short-term liquidity grab above these stops here. Doesn't mean that the larger, higher time frame trend is over. This should go to 110. Euro should go to parity. I think we're still quite clear on that. US 10-year yield is still increasing. Bonds are not a good hedge in this kind of environment. We called the top in bonds years ago, literally years ago. The minute that line breaks, we're going to start having issues there. I'm sure short term there may be some pullback here. Oil is pulling back. I believe the oil stocks have probably topped out in their cycle. Very much typical of the time that this cycle has sort of gone on. I mean, to me, that doesn't look very good. We'd call the top in that last week. Sure, I might be wrong. It might not have topped, but I can see ExxonMobil pretty easily pulling back to at least 65 here, right? Stocks usually lead oil, so I can see oil pulling back too. If that is indeed part of something like this, obviously we can reassess that if and when we need to. Right now, oil stocks definitely have to go lower, and I think oil could easily pull back here. This is looking quite toppy. I called the top here sort of a few months ago, and really oil has done nothing to convince me it wants to go higher. I did think sort of a few weeks ago it may run these highs and then come back down, but that could easily be a 1-2 coming down. As an absolute minimum, therefore, we would expect oil to break $100 and get to around 85, right? And that is quite typical of a oil cycle, 2.5 years here, and it's pretty extended, so oil is definitely, if this is going on, fine, we can reassess that, right? We can reassess that. But if that is the oil move done, if the entire oil move is done, we're now going to have a larger pullback, right? I said to my group, this could hit 50 by the US midterms. That could still happen. But regardless, we will reassess, right? This is a market where you have to reassess constantly because it's so volatile. So let's see, right? That's certainly one bullish sign that I am seeing, right? For risk assets to reverse themselves as oil coming down, right? It's not had an immediate effect on the ES. ES is still coming back down, isn't it? Here, and we're approaching this 3,500 level here. 3,500, there's a pivot level there. That's the pre-pandemic high. So sure, we are coming into an area where, most people wouldn't mind jumping in here. But it's still, I still feel, fine, that might flag there. I'm not interested in any short-term bear market rally here. This market still goes lower. But let's see what kind of bounce do we get, the next bear market rally, right? Looking at the stocks, they still have a lot lower to go. So let's do a quick rundown through the stocks. So we called the top in Nvidia 6 months ago on this video here. That was over 3 months ago there. I said it's going to go to sub 100. Anyone who's holding long-term puts here is now up well over 3,000% on that, right? As long as you're okay holding through any of this. If you're holding long-term puts, well, then it doesn't matter. You don't always have to hold short-term puts. Look at how weak this level is, right? We're on the weekly chart. This 155 is going to break so quickly, and then there's just nothing. There's nothing stopping this going to below 100. Tesla, I thought for the longest time it can go to 200. Sure, there might be some pivot levels there at 512, but it's going to go lower. You know, this entire move has to get reversed. Most of this move has to get reversed. We can go through Apple. I've told the group it's going to go to 83, and I think that is a great buy there. You know, that is a superb buy for a stock like Apple. It's not often that you get such a great discount on a stock like this, but the interim target would obviously be the gap at 100, right? There's obviously a gap there, which I can show you for those who perhaps haven't seen it. You know, there is a gap here. Huge breakout type of gap here prior to this ending diagonal pattern. And, you know, it doesn't look very good, does it? You know, that's a lot of cause. When I discuss cause and effect, by the way, it could be rectangular, it could be square, it could be a flat, it could be a triangle, it could be a descending wedge. Cause, well, effect is proportional to cause, right? That's the first thing. Secondly, it doesn't have to be a rectangular cause, right? It could be any shape. Any period of consolidation is setting up for a big move, either up or down. Given this amount of consolidation, and I've done the Wyckoff targets here, which once again, we discuss in the group. This is how I used to project targets, by the way, right? The old school way, right? Old school is the best school. I mention it in my Wyckoff target, which I believe is here somewhere. I mean, I forget exactly where it is. There's so many modules. There's 48 laws of power here. Where is it? Here. I discuss Wyckoff targets, right? How can you work out the price target based on how long something has gone sideways for? Isn't that interesting? Right? Fascinating, isn't it? Microsoft, you know. And I suppose shorting's not for everyone, you know, you don't have to short. I mean, I said it could touch the pre-pandemic highs, and I still think that is a possibility for Microsoft. That should get to sub 200 there. So whilst we are getting close, and I suppose the more something falls, the better it is from a mathematical perspective, going back up again to the same level, and we get that. But at time of doing video, when they start coming after the big players like Apple and Microsoft, you know you have a problem on the index, right? So other than oil dumping, which is a good sign, by the way, that's one of 20 signs. At time of doing video, I do not see a firm, sustainable low in the S&P, but we're getting close. And one thing just to watch out for here is the S&P is not the stock, right? You cannot say this is a one-to-one correlation with XYZ stock. You cannot say that, right? What I'm trying to say is many stocks topped out before the S&P and the Nasdaq peaked out. The point being, the stocks may very well do this, make a higher low as the SPX and the Nasdaq make a lower low. You have to be watching out for relative divergences. That is a Wyckoff technique from the 1920s. You have to look for relative strength. It's no good just saying, right, S&P is going to go to 3K. That means XYZ stock is definitely going to be falling alongside it. No, there will come a point in time here pretty soon. I won't tell you when, but it's something to watch out for. So if you're eyeing up any stock, make sure you look at the divergences with their index. So XOM, you have to compare it to energy stocks. SPX, compare it to the SPX stocks. Nasdaq, obviously compare any Nasdaq stock to the composite, right? You have to be able to compare any stock to its sector and then to its wider index, right? Because stocks make up sectors. Sectors make up the index. But anyway, specifically talking about the index here, I still think that there's more downside to go. There might be a flag type situation and an interim low here, end of June, first 2 weeks of July. Hey, I'm okay with that. Doesn't change the long-term count. This market still is going to go lower. I think 3,000 is a possibility here, 100% I would say, only because it's such an obvious round number where everyone's going to capitulate. Everyone who's holding SPY index funds, long-term investors, short-term investors, they're all going to capitulate. Then I will reassess the situation. I don't think there's anything more really to cover here other than that. So I think we've covered everything here. VIX is just the last thing to cover here. VIX, I don't feel is quite ready here. The way things are moving today, this could be printing up as high as 33 today. My feeling is something like this on the VIX. A big spike in the VIX is usually is synonymous with you know, the low, basically, right? The big panic spike up in the VIX above 50. You want to be watching that, because that may very well coincide with the low. Could a 3K S&P level coincide with a sudden 1 or 2 day spike above 50? Of course it can. Right now it's basing, though. It's basing because everything is controlled. But this is setting up for a big move in the VIX. Something just to watch out for. My opinion is this still consolidates a little while longer, then we get the spike up. The big spike in the VIX is usually shortable. You know, high spikes in the VIX are always shortable. They always fall back down, and this obviously coincides, this one with major market lows, right? So at time of doing video, well, once again, I see zero evidence to say the current ES price is the low. You know, it's very hard to justify that. I mean, that doesn't look good. I mean, you zoom out on a monthly. Do you really want to say a candle like that is the low? The only thing I will finish off by saying is, obviously, it's now 125. You know, 75 on Twitter and 25 on YouTube, who I'm now fading, basically, right? So that's why I got off Twitter. I was giving away too much information. I was getting, you know, there are institutions who look at your tweets, they read their tweets, and they analyze everything. Based on the 125 that I have, many of them are saying this low right here that might very well be formed, given that we're coming into some obvious block levels here, is going to be the low. That's what makes me think we could either just run straight through that level, right? So either way, short-term, you know, move aside, you know, this market has to go lower. 3K has to get broken. Like I said, anyone who's gone in here with a stimulus check who hasn't taken profits, they have to give it back. You know, it's not, the stock market is not that easy. You can't just take government free monopoly money, make money, and then you know, that's it. You know, stock market is very difficult, and usually it's in the bear market when the tide goes out, you realize who's not wearing any shorts, basically. So that is my current take. If you would like to know more, if you'd like to get my take on individual stocks, please do have a look. If you have a mortgage, perhaps this mortgage amortization course would be useful to you. Certainly it's been very useful to a lot of people. Understand how the financial system works. You know, I have another course which will get released at some point over the next 3 to 4 months. I'm not sure when. We're just in the finalized, well, we're still producing that course, and then that will be it. You'll get everything from a financial perspective. You'll have the group, and you'll have the educational course. So there's plenty of information that I'm giving out there, pretty much free of charge. Well, certainly it feels like it is free of charge. I mean, you know, it's I suppose you could just watch the YouTube videos, but there's no consistency as to when I'm going to do these. But anyway, we can wrap it up there. But if you would like to know more on a daily basis, please do have a look. And you know, it's very interesting times here. And but ultimately, a chart never lies. I mean, that is a horrible looking monthly chart on the ES, right? And whilst many people are looking at this block level that we're about to get into here at 3,500, you know, this could get a lot worse. However bad you think that this could get, this could potentially get a little bit worse. So once we get enough bearish sentiment, enough capitulation across the board, there will be bargains here. There's no doubt bargains are coming. No doubt bargains are coming. Anyway, I'm going to wrap it up there.